good afternoon, everybody. And it's been a very, very interesting trading session. Yesterday, if you go back to what we saw, there was a bit of relief coming through in markets. If you look at what happened in the PBOC's daily fixing, they certainly didn't depreciate the currency as much as what the market had been expecting in their sort of fixing models. The markets took that despite the fact that the US had labelled China a currency manipulator, that they hadn't actually fought back, and that was a kind of a quasi olive branch, so to speak. And there would also been announced a 30 billion renminbi bill sale coming through Hong Kong, which will suck some of the liquidity out of the market and potentially strengthen the CNH, the offshore Chinese renminbi. And of course, in that situation, what we're seeing is the dollar CNH very much at the epicenter of markets. Now, we saw that relief rally coming through. What we wanted to see today was that Asia responded in kind, and that hasn't necessarily happened today. If you have a look at Asian equity markets, have a look at the markets we're seeing here. You can see the Hong Kong market down 92, the Japanese market really responding to a stronger yen. The yen is up against every G10 currency. We've got dollar yen, which at one stage was trading sub 106, just a little bit higher than that level at the moment. Certainly the yen, the Nikkei are under a bit of pressure there. The Chinese market's down smalls, but it's the ASX which is outperforming. And I think that's really interesting, because I think what we have to do is we have to look at the Reserve Bank of New Zealand and what happened in that part of the market. The Reserve Bank came out and cut 50 basis points off their cash rate today. The market was probably looking for about 25. That was extremely over what we were expecting, and the Kiwi dollar has been absolutely decimated today. The Kiwi dollar against the US dollar is down 2.2%, one of the biggest moves we've seen in the Kiwi for quite some time. The RBNZ once again reaffirming the idea that if you want to be a central bank that gets ahead of the curve, there's no one out there in G10 that does it just like those guys. They get in front of the curve time and time again. And the market responds in kind by giving them a much weaker Kiwi dollar. Certainly Donald Trump would like that same thematic to play through in the US with the Federal Reserve, but of course they're trying desperately to keep their independence in that situation, not become a political beast. But the Kiwis have cut 50 basis points, and that's sent their bond yields down about 17 basis points on the 10-year. That's resonated in Australia. Bond yields have come down quite sharply, and if you look at the ASX, why is it up? It's because a lot of the stocks which act as bond proxies have worked very nicely in that market. The financials are putting in some good points. REITs are working very nicely. We're up about 70 basis points or so in the ASX 200. But the currency markets, Kiwi's been taken to the cleaners. You've seen the Australian dollar respond also as well. And have a look at the daily chart there on Aussie against the US dollar. That's now trading just below the flash crash low. Every rally we're seeing the Aussie is being sold. What we've also seen today is the daily fixing mechanism from the PBOC. That comes through at 11:15 Eastern Standard Time. They can guide the currency up and down as they so choose within a range. They actually set that today at 6.9996, which is up 313 pips. From the prior close. So just below the 7 handle. It was just a little bit higher than what the market was looking for, but it's not certainly going to upset the Americans in any kind of great form. But I think the market's taken a reassessment today, and they've said to themselves, yesterday was more a relief rally. The situation is getting worse. It's not getting better. In case where the PBOC can give a quasi olive branch, but we're more likely to see further tariffs being placed on the Chinese, and really this isn't going to go away until after the presidential elections. Have a look at the calls now for US markets based on what we're seeing here. We've got the S&P down 19 handles. You've got the Wall Street cash down 179. The opening calls for Europe aren't that bad at the moment. I expect them probably to gravitate a little bit lower, but certainly, as it stands at the moment, the market is saying, yes, there was a relief rally. We've got more pain to come in this session ahead. Also, keep an eye on the bond market and the US bond market. We've got that 2-10 curve pushing 10 basis points. If it goes through there, then I think people will ramp up their ideas of inversion. What's worked on the back of lower yields? Gold. We've seen gold futures above 1,500 today. The spot gold price is up around sort of 1485 at the moment. How long does it take if real yields are falling? How long does it take before we get gold going up to $1,500? I don't think it'll be particularly long.